Hey everybody, Abdel Nisa here. Thank you for joining me. I'm getting texts from friends that I haven't heard from forever. My wife came to me this morning, is like, what the hell is going on with GameStop? So I thought I will do a video to explain everything. So let's get to it. So let's go first over a few concepts that you need to understand, okay? And I will cover what shorting is, how does it work, okay? So think about it this way. When a stock is worth $100 and you think the stock is going to 150, what do? You can buy the stock, of course. Now, what happens if the stock is worth 100 and you think the fundamentals of that business are not good and you think actually the stock might drop to 40 bucks? Okay, when you do your analysis, you're like, no, there is no way this stock is worth 100, it's going to 40. So what do? Now, of course, if you own the stock, you have to sell it. But could you make money even without owning a stock? And this is where the concept of shorting comes into play. Okay, so here is how it works, okay? What you do is you find somebody else that owns the stock. There are always people that own the stock, and their views, because there is a market, their views are going to be different than yours. Some people we call it long the stock, okay, like they own the stock because they think that the prospects of the company are better, while you have a different view. That's what makes markets, okay? So what you do is you find somebody that owns the stock, okay, and then you borrow the stock, okay? You borrow it first, all right? You're like, okay, why would those people lend you the stock at the first place? Well, there might be a small fee that you have to pay. Think about it as an interest. So for them, it's an extra income. They like the stock anyway, and they make an extra income, so they're happy, and then that's how you lend the stock. You borrow the stock in your case, and they lend you the stock. Okay, now, you have the stock now in your hands, okay? So what you do is, the stock is worth 100, you sell it, okay? So you borrowed the stock, you sell it at $100, and then, obviously, if you're right, and then the stock gets to 40 bucks, okay? So then you buy it back. It's called covering the short, okay? You buy it back at 40, so your profit is $60 minus that small interest that you paid to the lender, okay? Now let's talk about risk when you short stocks. Now obviously, if you buy a stock for $100, the lowest value that the stock can go to is 0, and therefore, you could lose a maximum of 100% of value, okay? All right, that's without margins, without anything, okay? So if you buy the stock straight with cash and then the stock goes to 0, guess what? You lose 100%. Now, what happened when you short the stock at 100? Remember, you have got to return the stock at some point, okay? And so in this case, you have to buy it back. Okay, so if the stock goes to 150, you're losing 50%. But what if the stock goes to 300, 400, 500? So your risk is unlimited, okay? You could lose like crazy money when you short stocks. Okay, let's now talk about the concept of short squeeze. So how does it work? So I actually play this game with my students so that I explain to them how this works, okay? So let's say we have a room of 100 investors, okay? And this is very important, a lot of these investors, let's say, they have shorted a stock, okay? So there is a consensus view that the fundamentals of the stock are not good, and then the stock will go from 100 to $40 as the example we have mentioned. But a lot of people have shorted the stock. Okay, so now for whatever reason, and we're gonna come back to this, okay, it could be earnings, it could be something else, the stock starts going higher. Okay, so let's say it goes from 100 to 105. Okay, so then I ask my students, hey, you're taking 5% loss. Are you okay with it? Most people, they say, yeah, okay, 5%. I'm still convinced this stock is gonna go to $40 and I'll make about 60% of return. So I'm okay. All right. Now, what happens if the stock goes to 120, 150? Okay. So now I ask people to raise their hands. What do? Now you're losing a lot of money, 50%. You have to cover and buy the stock, right? Because by covering, you buy back the stock so that you can return it to the person who lent it at the first place. You have to do that. And I say, raise your hand if you need to cover. And then I see more hands going up in the room. All right, people start to realize, holy cow, we're losing money. Now, when a lot of people are covering, because you see a bunch of hands, let's say the entire room starts to buy, guess who is pushing the price up? It's those people that shorted in the first place. They're causing the price to go up, and that's called the short squeeze. So this is nothing new. It happens all the time, okay? The short squeeze is the people who borrowed, and then the stock goes up, and then they push each other, and then the stock price goes up. Okay, so now let's talk about the GameStop situation, okay? It's really like interesting. This is what's different about this one, okay? So, and the link to the Reddit, okay, and all of that, okay? So let me explain it in very simple terms. So what happened is some group of people in Reddit know how the short squeeze work, okay? And then they got together online and they're like, hey, you know what? A lot of these Wall Street managers are short the stock. Let's all agree to buy and push it around in the internet, and then so that we can cause the prices to go up, and therefore those Wall Street managers will have to cover, and that prices will go even up more, and guess what? Then we will make a lot of money. Okay, so what's the difference here is, I mean, to me personally, this is considered market manipulation. Okay, you're manipulating prices. And by the way, this is not, in history, it's not the first time that prices have been manipulated, okay? The reason we have regulations is, okay, like this is forbidden today, okay? I'm registered, okay? If I do something like this, I'll go to jail, right? So I will never do something like that, okay? But in this case, it's all online, and people like these people are not regulated. I'm sure there's going to be some stuff that's going to happen because of this. And then they got together and colluded to push the prices up. When this has happened in history, the first time, second time, then the regulators like, well, this needs to stop, and we had to put rules, right? Well, same thing here. Now it's happening on the retail side. So I'm sure there's going to be some rules or something that's going to be done to forbid this, because in a way this is not fair, and I will explain why. Okay, so these prices, so the case of GameStop, in less than a month the stock went from 20 bucks to over 400 bucks. Like, that's 20 times. All right, and it's not like the stock had reported some excellent news or the company is getting acquired. Based on what I have seen, at least the fundamentals have not changed. So this is more, we call this technical in nature, and most likely it's this short squeeze that has caused these prices to go up, okay? So here is the issue where I really want you to be careful, okay? There is no easy money in Wall Street. Most likely, okay, I'm gonna guess here, I'm not sure of course, these people that have started this whole thing, guess what they have done now, okay? They're already out, they probably already saw this like, well, we made so much money, okay? And we're exiting the position we sold, right? So guess who is buying, right? Because they have to sell to somebody to get out, right? You got all these people that don't know the game, that don't understand how short squeeze, that don't understand stocks, that don't understand anything. They're just hearing, oh, check out GameStop, this stock is making so much money, and they're greedy. Okay, be careful with greed. And they want to make the same money. But you know what? The past and the future for stock market is not the same. So you might be buying like really, really high, and the problem is you can be, unfortunately, the last fool that's gonna buy right at the wrong time. And I don't want you to be that. So you have to be very, very careful, okay? I don't want you to just step in and then just buy just because everybody else has wrote that GameStop has made so much money. Just be careful out there. I'm not obviously not giving an advice here, but I just recommend to do your homework, be very careful, because these are unusual circumstances, and I really care that you don't lose money for a stupid reason. I want to say a few words about the debate, Wall Street, Main Street, and this movement and all of that, okay? And I'm going to be very careful here because I don't want to take sides, okay? And I want to be very fair, okay? So I'm not taking political side, I'm not taking any side, Wall Street versus Main Street. I just want to state facts, okay? So I read a lot of things, and my wife shared with me a lot of posts. Okay, well, this Wall Street is, it's payback for Wall Street and all of that. and here is the honest truth from my perspective. You know what? A lot of things that are said about Wall Street are right. Let's be honest. I worked in investment banks and all of that. I have seen it. There is greed, like politics, backstabbing, all of that. There's a lot of dirtiness in Wall Street. So the stuff that you see in the movies, it's just not, it came from nowhere. There is some truth to that, okay? So I'll start with that, okay? Now, on the other hand, okay, and again, I'm gonna be fair. Really, what you're seeing here is kind of a little bit the opposite, because who has started this whole thing? That's like a mob. These guys in Reddit got together, manipulated the market, and the prices went up, and then they most likely have profited from this, which under Wall Street rules and the regulator is not allowed. Okay, and that I have a problem with, because who is going to lose at the end? That's the issue I have, is the retail investors that is not experienced, that's gonna buy at the end, all right? And then you're starting to see it already, okay? Stocks are falling, right? Because the fundamentals are not right, and most likely these stocks, I mean, they can keep falling because, there are no buyers and things are stopping to trade. And so my point here is like, in this special situation specifically, all right, so who is going to lose? Wall Street is losing, some hedge funds and stuff are lost money, okay? Yeah. But also, the issue is like at the end of the day, okay, retail investors that are joining at the end of this will lose. And that I have a problem with. Okay, so come on now, all right? You know what you need to do. I'm not even gonna ask for like, subscribe. Just ask questions, okay? Make some posts, ask questions, send comments, all of that, okay? Because I really want you to understand all of this, and I wanna make sure you invest the right way, okay? I care about you and I want you to do well, all right? Take care, and I will see you next time.